Hi guys, I know this video has been a while coming, but I think in the last couple of weeks I've just reaffirmed a lot of what I've been thinking. I think the recent price action up is kind of low and slow, and I'll come into this in a couple of minutes as to why I think we are where we are still. There's a little bit of an explanation in terms of the COT data that kind of marries this particular concept, and I just want to put some emphasis on covering what I'm seeing, why I think this is still the same situation overall, and hence the kind of lack of video content. I don't really need to say much in terms of what's there. I'm not looking for subscribers. I'm not looking for likes and comments. For me, this is kind of all about the trade. I'm going to explain a little bit in terms of where we've come from, why we've come from there. I'll show you some of the kind of past posts as to what I was saying, months and months and months ago, maybe going back a year or so now. And the general idea is that just to give people a bit of a clue in terms of where on the roadmap, and not just say, hey, I think we're here and there we go. I really want to go into some depth as to the logic to why we are where I think we are. And what I'll do is I'll just cover each of these subsections. So what I'll do is we'll go first of all into my profile. And if you come into my profile on TradingView, so I'm just going to come back up to this first page. So first of all, you'll see one of the more recent posts that I've done was actually the roadmap update. And this goes back to the initial post back in March. Okay, so I've covered this a million times right now. The emphasis is always on this because it's kind of the underlying bias as to where we are, why we are where we are, and obviously where we go next. Okay, now when I was calling this back in March the 26th, I was assuming that we were at a weekly 3, coming down for a weekly 4, and up for a weekly 5. Okay. Now, if you scroll on down into this particular post, and I'll put all these in the bottom in the description so you can click straight through on these, you'll see that I was covering the 3 to the 4 with a shallow and a deep kind of zone target area. That's something that I don't like to do often in terms of forecasting the actual projections, but there was a lot of confluence and a lot of crossovers sitting in this. So lots of market symmetry and the confluence given this kind of region as a whole. Now, you can probably take 50% of that and use that then as what I would class as fair value in terms of institutional investment and traders taking that on. So I'm looking obviously for the fair value. What I'll do is I'll scroll down because I've just recently updated this one. So I'll scroll on down, and again, this kind of explains the logic in depth as to why. So you'll see on this one that I've just updated here on the 13th of November that we did indeed come down for this move. We come across into the fair value. This ultimately looks like it was some kind of hidden accumulation in this, and then ultimately up and off we went. Now, great and wonderful, and this could still be a play. This was the forecasted level, around 83,000, taken up to about 97, if I remember rightly, on this. Now, I personally don't feel with the recent events that we actually get this high before the 4 on the monthly is instigated. Okay, now again, I'll cover this in a second as to why, but if you look at where we were weekly 3, we were coming down for a weekly 4. The next obvious play is the monthly 3, which will actually give us the weekly 5. Okay, so what you'd actually expect to see is a fractal count from the low into a 1, 2, 3, 4, giving us now some kind of 5. Okay, so nothing really is shocking. Nothing's really changed. Hence the reason for not really updating every single swing, every single move, in this. So what I'll do is I'll come back then to the initial posts, and I'll just break it down kind of step by step, right? So although I'm covering a lot of what I've already covered in these posts, for you guys that don't, follow or read these posts, regular, I'm just going to cover kind of step by step. So I'm going to come all the way back to the 21st of January on this particular move. Now, there's a little hidden one there you can see in here. Right, so I'm going to click on these one by one. So in essence, you can see by the title, I was looking to short to take this long. Again, fair value. This is a term that I like to use quite a lot. Looking for fair value, and then ultimately up and off we go. Okay, so you can see the price was around the 34 level there, and overall, up and off we went. We all know that story. Okay, so the move there was obviously from here a short to long. We didn't quite get where I was anticipating this to go, but as soon as we broke that structure, it was obviously a good trade then to the upside in terms of move one. Okay, now I'm going to come back to just get out to this one. What I'll do is I'll take out to this one, and then the next move we had a little bit of a move here, and this one was actually the roadmap. So just plotting where I thought we were at this particular point. Okay, so obviously just covered that one. Now, as we started coming towards the top, I started posting a little bit more, and I know these are on different time frames, so you'll see the rocket one I think on a smaller time frame. But ultimately talking about then simplicity, and again putting into perspective why I was looking for these bottoms and tops and looking at the moves at the levels I was looking at. We clearly had the extension levels going back to my initial 2017 moves. I've been very fortunate in Bitcoin myself, buying in at 2011. So, for me, it's not a question of being bearish. It's just using some common sense. And I think it's just a question of, taking profits when profits are there and profits are sufficient enough to take, and then coming back in terms of buying the dip. Okay. So my biggest fear for a lot of retail investors or traders, if you will, is that when you have a prolonged bear market, which we could easily fall into, given the fact that the weekly 3 to 4 was so long, if you think of what the monthly 3 to 4 could end up being, it's going to be quite hard for a lot of people that have, sold up everything, taken loans, done this, done that, and kind of backed Bitcoin 100%. Now, I'm not saying they won't win in the long run, of course, but when you take a 6 months or a year, potentially even longer in terms of a bearish type move, it's going to feel quite restrictive for somebody that is sitting on a pile of cash they can no longer access, which means they're quite likely to sell out, and therefore, the composite man kind of wins again, and that's just a story as old as time. So coming back to obviously this particular post, you'll see that we had an interest dip, we had kind of key levels giving us the divergence, and therefore the move up was, kind of short-lived in the grand scheme of things. So that obviously was back then again, at the top of the move. We then looked in terms of this coming down, and clearly we had the one that I guess a lot of people maybe remember of why I was calling this particular move. So on the 18th of March, you'll see that I was looking for a straight line A. I keep saying this, we overshot the 8 hour block here by 2.5 grand, which basically offset C by 2.5 grand. We then put D up 2.5 grand, and E was always going to be the extension. There was a couple of areas of liquidity over here, so that was always going to be the extension. We just actually got to the 168 rather than the 123 or 127 that I was actually anticipating from this particular move. So just going to press play out on this one, and you'll see again clear as day, we done exactly as planned. We come down to the pip for A, 2.5 grand over on B, pulled up C, which is this one here, 2.5 grand, which ultimately took D up 2.5 grand, and then straight down as expected into the zone, consolidated obviously sideways for a while, and ultimately started to move on up. Now you'll see in this post again, I had the 5 already in anticipation, so you can clearly see what I was looking for in terms of 5. I'm happy with this call. This is what's kind of played out. Nothing really untoward, nothing I wasn't really expecting, and therefore, it's just kind of doing what institutionals are kind of wanting this to do now. So I had a couple of calls on the way down. This was more just education, and obviously showing in terms of Discord and some of the group, what I was looking for. A lot of these are just kind of cartoons and kind of gimmicks. Again, just kind of showing some education throughout this, but clearly no bias, kind of at the bottom. And the reason that I've kept this as kind of no bias is on this particular move up. I'll come into the volume again now in a minute, but on this particular move up, there was nothing there that really gave me any form of excitement, any form of interest. Now, on a personal level, as I said, I've held Bitcoin since 2011. I'm not really interested in this type of move. And there's one main reason why. Now, buying at spot, there's a little bit of liquidity down around the 19k level, right? So when I come down around here, there's a little bit of liquidity sitting down here for me, which meant when we come down to the 28, 30k mark, knowing that we were actually still weekly 3 to 4, I didn't fancy the risk of having a sub 19k stop loss with a forecasted target up and around only 60k. Okay, because I didn't feel confident, comfortable in terms of a move where I would require, from 30k down to 19 doesn't seem a lot, but for being where I am and spending the last 20 years doing this type of thing, I kind of feel that the move that I'm looking for, especially in Bitcoin, is the longer term buy and hold. Now, I'm going to get that ultimately on the monthly 4 move, and that's what I'm looking for. Now, the monthly 4 move, once this is finished, it's 5. It could come all the way back down, and we could see an evil wick down to 19. I'm not saying that's what we get, but that's potentially an option on the table. I do think we have the fair market value, and I'll come into this one in a second, the fair market value back down comparable to the weekly 4. This makes a lot of sense. And then I also think that we've got around 42k as a potential area there. So for me, anything ranging from 19 to 42, which seems a colossal range, but I think realistically, possibly 42 is the ideal scenario for the monthly 4 coming back. Now, you might say, well, if you bought at 30, this, that, yeah, that's fine. But for me, the probability versus the risk reward ratio is what I'm looking for as a professional trader. I said at the start of this video, it's not about subscribers and likes and smashing this and smashing that. I really don't care. I'm not looking for people's opinions. This is something that I'm doing in terms of trying to help newer traders in this particular field. And that's all I'm, predominantly concerned about. I can do this all day long, every day myself. I can trade this inside out and put this on an hour time frame if I really wanted to. For me, that isn't the strategy, especially when it comes to Bitcoin. This is only buy and hold. I'm looking for a monthly 4. When I get a monthly 4, the upside projected targets are a lot higher than the initial 60 odd K that I was looking for here. So I was in no means interested in buying down this particular move here. So from September, I'll come into this again in a second. So I'm always kind of putting this into the next piece of the context. So in this particular move here, what I'll do now is I'll show you on the chart. I'm going to flip across to an image that I have here. So you'll actually see on the August post. So I've mentioned this again a couple of times. Where we were on the move up, we clearly were having the 3. So you'll see this, the 3. This was on the 24th of August this year. You clearly see I was aiming for the 3, back down for a 4, up for a 5. Okay, now I've just covered that obviously in these charts as well. And what you'll see now on this, that we would actually have, I'm going to come down onto the daily. And what you'll see on the daily is around the time around August, let's get this one, around August, we were looking at this particular move up here, and then we got up to, where was it, this one, the 24th of August. We was looking for the move down, so we had a slight move up there, look, the move on down, and therefore this would have been an ideal buy-in opportunity if you were looking at the intraday trades as a whole. For me, like I said, that wasn't really interesting. We had a key level down here around the 35, but I've had a stop loss down, under 19, and I'm looking for an upside target there. That, is probably a little bit more than a 2 to 1 in the grand scheme of things. Now, I can get that in Forex all day long, and it's just a lot more sustainable for me. And therefore, Bitcoin, the type of investment, the kind of trade I'm looking for is much, much greater than a 2 to 1. And I think I will see that in terms of a 42 or sub 42 pullback monthly 3 to 4. Okay. So come back into the next couple of posts. I'm going to scroll on down to the currency and cycle. So again, all of these are available in the TradingView profile. Now, This particular image, this is COT data, so this is the commitment of traders. It's US, kind of, I guess, a sample size of the market. This is only covering the US, but it's a big enough piece to get an understanding of what the large operators are actually looking at, why they're looking at, and what they're actually doing. So this comes out Friday night for me, Friday afternoon, in terms of US participants. Now, what you got to look at here, right? The market is going up, and we have the shorts being blue. This is leverage funds. The shorts being blue are actually moving up right now. A lot of newer traders, a lot of people that have maybe only traded crypto, don't really understand the operations kind of underpinning the market as a whole. You have to remember, right, that over 75% of retail traders lose money, right? Now, in Bitcoin, this has become a little bit more of a cult. You've got guys that are almost unwilling to sell, right? Now, the benefit of this, if you're a composite man, an institutional trader with very deep pockets, is that you can force people to sell when you have a prolonged bear market, right? Now, if you think of what's gone up, we've gone up on relatively low volume from the 28K up to around the 69,000. We've only tagged a couple of key levels, and these have been Fibonacci extensions almost to the pip on a lot of this move. We've come up with leverage funds moving on up. Now, a lot of people will see this chart, and like I said, if you're inexperienced, you're going to see this chart and say, institutional guys are getting wrecked. No, guys, what you're actually seeing in this chart is it's the institutionals here that are actually selling off their positions that they bought way back when. Okay, so this is a classic example of wholesale buying cheap, selling to retail at a decent profit. Okay, so unfortunately, this doesn't work as simple as institutional money in and Bitcoin goes up. This is institutional money in and a lot more tactics become the norm. Okay, now as an institutional trader, as I suppose the composite man, kind of the multiple traders as a whole, what you're going to be frightened of is the price running too far away from you. So this is a very, very controlled tactic. It's used in all markets, all instruments. And when you understand what these guys are doing, it's not these guys are getting wrecked. It's these guys selling at a premium to retail traders that are currently unwilling to sell. Okay. Now, diamond hands and, the Twitter universe, all of this is kind of, I suppose just an accelerant to what Composite Man and what these big guys are looking to do. And it's basically cash out of previous positions because these guys are not thinking, oh, well, we're going to take this to the moon. These guys are thinking of private jets for Christmas, and this is the difference. Okay. Now, you might think that, putting a 5,000 or 10,000, even a 25,000 investment into something like Bitcoin is great. The reality is, when you look back at something like Amazon and Amazon stock, when Amazon had a market cap of $100 million, for it to get to $200 million was pretty simple. Now Amazon have covered over $1 trillion worth of market cap. How difficult do you think that move to double up from 1 trillion to 2 trillion is going to be for a company like Amazon? Okay. Now, Bitcoin is slightly different, obviously. However, there's a lot of similarities to the market cap and the inflow of money required to make kind of gigantic moves. Now, again, you could argue institutional money in and therefore it's going to the moon. Yeah, but you've got to take a step back. You've got to understand these cycles. And you've also got to understand that over 75% of retail traders lose money, right? Now, you might think, oh, I got these massive paper gains. Yeah, wonderful. However, if you're not willing to cash out, you're not willing to stick a stop loss, this could easily drop. And let's just assume worst case now, we come all the way down to 19K. There's going to be a lot of people who assume they have diamond hands right now, will actually be fearful of the drop being, continued, prolonged, put out there. And I think that's the trouble that we're actually going to see more and more, as this market does what the market does. Okay. So again, this is only covering the logic. I'm not saying I'm bearish. I'm not shorting this right now. I'm just not in a comfortable position that I want to be buying here. Okay. Now, I'm going to come now down to the next one. So I've got the, which one here? So I've got the Bitcoin Elliott and the Wyckoff one. So again, October the 23rd. Now, on October the 23rd, I've actually covered a little bit of the logic again as to where we are, why. So you look at the Wyckoff logic, the distribution patterns. You can see where we were in the initial move. Okay. Now we've come down, which is in essence this, and we've now moved back up. Okay. Now this is the move back up. So we've got the low there, we've got the move up, and we've now created clearly a new all-time high up around the 69. Now, what you'd expect when you create the new all-time high, you kind of want price to rocket through it. You kind of want price to go up and almost keep going because there's a lot of interest at that level. The fact that the COT data shows institutional investors adding to their shorts, the volume being very low on this move up, and I've covered this in this post. So again, back around October, you'll see the arc up in the volume on the main rally, and you'll see then descending volume on this way down. Now, on this move up, we've actually had lack of volume. When you compare that to this rally, we've had lack of volume there, okay? So for me, this emphasizes a kind of low, slow, controlled, manipulated move up even, okay? Now, if you look at where we are on this as a cycle, I think we've only come to now, this is actually hiding behind the chart's hiding behind. We've had the 3, we've come down for the 4. This is the 5 on the weekly. Okay. Now, how that looks on the charts, just take some of these off. So how this looks on the charts, right, is we've actually got a 3, 4, 5 move sitting there. Now, I'm not saying that the 5 is over because I'll come into the extensions again in a second. So we clearly had the 3 weekly, right? I'm going to assume a 4 weekly, and I'm looking for a 5 extension weekly. Okay. Now, if we take just rough fib levels and we go from the low, we've got the first swing, second swing. We clearly had a 2, 6, 1, 8. So we had an extended 3 there. You'd normally expect the 3 to come around here. We had a 4 down here. So for me, the move in here on the smaller time frame is we got a 3, we got a 4, and we're moving up for a 5. Okay, so literally we've kissed the 5 at a 4, 6, 1, 8, which just hyper extended. However, we've come up on low volume, right? We've only come just above this current previous all-time high on low volume, right? That for me gives me more and more comfort that this is now creating the monthly 3. We might get another stab up here around the 72 to 75. I don't think we get as high as 83 to 95 as I initially thought going back in March. But I think for me, the levels all make pretty decent sense, okay? So I'm going to take this 2 ways. I'm going to take this from the high or the low there to the high here. And we've clearly had a 5-0 move there. And you can clearly see that it's not going to be much difference on this move. But you can see that the price pull back at this level, 50%, classic fib type level before the move on up. Okay, so this is obviously what I was talking about in August. We had the move down, a move up. If you were interested in the intraday, you could have taken this one. That wasn't exciting enough for me. The risk reward just wasn't sitting there. So let's get rid of some of these, clean up the charts. Now, the next thing is, on this particular move, I've actually seen a couple of other options. Okay, so on the 15th of October, I was posting this out in the Discord group and looking at where we were aiming for in terms of the move up. So we clearly had the 4 down. Now this is obviously a move within that 4. So going back to August, the move down, we had the 1, the 2. We've had a nice extension 3, pull back 4. You see the A, B, C sitting in here. And now, if we assume that the 5 is not quite finished yet, what we're looking at is a 0 to 1, a 1 back for 2. This is probably giving us the 3, which means we get a 4 and a 5. Okay, so I've put now a 26185 around this level, which is roughly 73,500, maybe just a little bit over. Let's give a little bit more for retail hype, and let's take that up to 75. So this is the logic, right, that we're actually sitting in right now. Now, if we assume that this is that move down, the only thing that will change my opinion to this and actually say, okay, we've had now a 3-4-5 move come in. This is creating technically a double top, although it's gone a little bit higher. I'd actually still justify that. So for me, I'm actually seeing a buyer's climax, and just get these off the chart. So what I'll do, I'll put this in. I'm actually seeing the buyer's climax here. We've come down technically for the AR. Okay, we then have a test sitting in there. We then come up for the UT. Okay, now again, pretty much like March, a lot of people are saying to me, this is reaccumulation. You know, I had that all the way through March. People were saying you're wrong, you're wrong, you're wrong, and then all of a sudden the price drops, more than 50% in a couple of candles. Again, there's reasons and logic as to why I think we are, here. If we look at where we are on the weekly time frame, look at the stochastic, we're already in the overbought territory. Okay, so this now is actually what I would regard as the shortening of the thrust. We coming up, we're making some wicks to the upside. You can clearly see the impulsive moves now are going to be to the downside. Keep in mind COT data and where we'd actually sit in from an institutional flow, right? There's a couple of other things even supporting that. Now, something else I saw this morning, I'm just going to share this with you as well. So this on the Glassnode reports and charts, you'll actually see that the long-term holders net position has only recently just changed. You see November 21, you'll see this the first time we've touched into some red area there. And obviously you'll see a similar thing to what happened in the previous move. Okay, so there's another little kind of warning sitting in there. So back to the chart. So in terms of the next kind of move for me, right, just got this off. If we assume that we are now at an extension level for a monthly 3, we've got Glassnode saying, first bit of red that we've seen for a long time. We've hit the extensions that were expected. We've got a stochastic sitting up high. We've got institutional money still adding to the short positions. No sign of a crossover, just yet. Now, all of this makes for me, a lot of sense, right? Now, if I'm composite man, I'm thinking to myself, we've had a monthly move here, which obviously was not a completion for the monthly. So this is the weekly. So weekly 3, weekly 4, and weekly 5. Okay, now these wicks, as I mentioned earlier, when you create a new all-time high, you'd expect, excitement, fireworks, a massive rally. We didn't get that. We actually got rejected, creating pretty much a nice kind of double top to a degree. Okay, so if I just show this, we got that sitting there. That to me doesn't feel like we've broken through and we're about to take off to 100,000 anytime soon. Okay, now I could be completely wrong. I think at the moment, a lot of people watching this, the thumbs down will come in, the bad comments, the negative this, FUD, all these kind of words. I really don't care. I think the thing is for me, I'm just trying to put out the logic as to why we are where I think we are. Okay. Now you might say, oh, well, you're bearish, you're always bearish. It's not a question of being bearish. Like I said, I've been bullish since 2011. I've managed to be very fortunate in terms of selling out, getting out, and therefore I'm happy with the current situation as a whole. Now, this one I've shared privately in the Discord group. This is a private idea you'll see there. I'll put a link to this in the description below for YouTube. But you can clearly see I was looking at the high, looking at the low. We've come up and taken another move on up. Now, again, I've used this. This was practically the August call and the move there. You'll see the logic for the four. Obviously, we can't change this in terms of information on TradingView. So you can play this out, and I'll show you. Although it says edit there, I'll show you what you can actually do. You'll actually see that we come down for a four. You know, we've stayed within the channel. The channel held perfectly, and we've come up for a five. Okay, so again, nothing really surprising there. In terms of the edit, you know, I can actually edit the words. I can't edit the chart. You can see that. So, in essence, guys, this has done nothing that wasn't really we could forecast. Nothing that I haven't really expected. Is still not really exciting for me. I'm only looking for long opportunities, and I think the fact that I think we've reached some kind of climactic action now. We've got a shortening of the thrust. You'll actually see if you really drill into this on a smaller time frame, you'll actually see an ascending pattern there. Now, as an ascending pattern, this is kind of lack of momentum in essence, which means you'd expect then a drop through, a retest down, giving us the A, back for a B, and down for a C at the 1618 extension. So we're not going to know where that level is until we get some kind of idea on this. Okay, so if we assume a C, you can see, and although I've only drawn this rough, you can see that from just a kind of key level, we've only got to come down to, I think 55 was something that a lot of people have mentioned. So let's just do this on the chart right now. So 55 being a kind of realistic level. There's some liquidity sitting there. There's a few other bits and pieces. Now, if I run a extension on it, if I run the extension on this, let's assume that we did have the high there. We come down and then we come back. Let me drag this in a second. I'm going to come back to just 60% just for the sake of this exercise. So what I'm going to do, I'm going to mark up the 60% marker, which is pretty much where I put it anyway. And then what I'll do is I'll drag the last move up. So I think that's the first one. So I'll drag the first one there, last one there. And what you'll actually see, if we get an extension that looks something like this, we're actually coming back to around the 38K level as a whole. Okay, now we could come down around this level, which would be symmetry around 48. I think we're just going to go a little bit deeper than that. You can clearly come down into these kind of zones. So I'm going to mark the zone up here. You got a top at around 44 and the bottom around 40. So that's 42, where I mentioned right at the start of the video. That's probably a decent enough target. But I do feel if we get down there, we're going to have a lot of panic selling, which will actually drive probably a deeper push, which takes us back down to this kind of region. I think around the 38K mark as a whole. There's your 38K. And then I think, for me, there is a little bit of liquidity, which will take us down, down to this kind of region. I'd like to say we've probably passed that, but I can't rule it out. Okay, so I'm going to stick to this in terms of where we are right now. So to finish off with, something that I posted a couple of days back, and I've covered this again in the Discord channel. So for you guys, especially the subscribers, you would have had this kind of already. I'm going to show you this with a smaller time frame. So on the daily, I'm going to show you first of all the what was this? The Wyckoff, the symmetry. Right. So this is what I was talking about just a couple of days back. So if we look at the symmetry, we've actually got an X with a nice rally up. So we've got an X with a nice rally up. We've tagged the one. The one is actually the buyer's climax. We then had the UT2 and the UTAD3, which means I think we are where we are, right? I'm going to cover this as a wick fill hat, and you'll actually see I've put in this particular move, I've put some levels that I'm expecting this to come down to. So we haven't quite tagged level one. Okay, so I think we still got a little bit more to come. I think we're going to go, 61, 61.5 realistically on this move down. I think this is going to be a lot of retail buy in the dip. The dip will take us to the UTAD. Like I said, I think this could be as high potentially as 71, 72. I think, 75 probably with a little bit of retail hype, but I think then we get the move, back on down. And I think this is where the levels back down, probably as far as 38, as I mentioned earlier. I think that's what we're actually going to be likely to see as a kind of overall move should this play out. Okay. So I'll just take this off. And then what I'll do is I'll come back out to the weekly. I know this is a longer video for me than I'm used to doing, but I think this is all useful information, at least worth sharing. We then have the Wyckoff moves here now. I'll have to try to figure this out in terms of the overall move. So, in essence, if we assume that we are where we are, if we now look at the much bigger distribution pattern, right now I've tried to cover this obviously from the BC in pink being there. We've had the AR down in terms of the rally, which is the yellow. We then have a green ST. We have a sign of weakness sitting down at this move. We've now had the UT, which is what I'm calling, well, this potentially this kind of level. I think we get the move on down, which takes us back. First of all, we get a move on up, which takes us to the UTAD. And then from the UTAD, we obviously get the full out distribution. So I think for me, that's still an option. It still fits in terms of the schematic. I'm not going to kind of stick to this as a whole. I think I'd like to see the next move first. I think once we get down to the previous support, I think it'll be something worth, kind of revisiting. So I'm going to keep that on the charts. And then what else do we have? We actually had the channel, which I know I've already mentioned. In the range. So the channel on the 29th. Again, you can see it's kind of done, almost exactly as you'd expect. It's kind of stayed. It's been respectful. Nothing really has been, scary or anything that's gone, oh, I've changed my opinion. I kind of feel we are where we are, and I hope with everything that I've just covered, this has made enough sense and given enough logic to, I suppose, defend a position overall. I think a lot of people assume that by calling, bearish sentiment, that you're selling, and that just isn't the case. I've already sold off a lot of my Bitcoin. I was holding over 4,500 of them back in 2011. I sold off kind of on the way up. It's been very kind to me. I actually got out, quite a lot again at the kind of 40K level. At that point, I really didn't think we were going much higher for the period of time. And I think when we started to realize that the Wyckoff structures and obviously Elliott was playing out, I think we again realized that, we kind of knew where on that roadmap that we would actually sit in now. Last thing to finish off with, one of these particular posts, and I think it was this one here. So on this particular post, I'd covered, I think it was this one, I covered this here, right down at the bottom of this here. So I guess all I'm saying as a whole is, the plan is, straight up 250K, straight up $1 million. And that's what a lot of people want, obviously. Okay. I think the reality is of the situation is if I go back to, the 2017 start, all we're seeing right now is we've come down for a one. We've gone sideways for a little bit. We then come up, we've had this kind of colossal move in terms of the three. And this now, I would say for me, was the weekly three. Okay. We've come down weekly four. This seemed a prolonged, kind of frustrating period for many people just wanting in. However, lots of people bought the dip and, this is where it's come to. I think the unfortunate part is that I feel that we've got this little rally to come, which is now only taking us to the monthly three. I think we've got the monthly four to come. And I think that monthly four is actually going to be an awful lot wider than the weekly four that we saw, back from May kind of all the way through. So I think for me, this is where we are. I'm kind of happy with where we are. I'm not actually selling, but I'm not into buying just yet. Okay, so I think for me, I hope that makes a lot of sense. I know if you're just a permanent bull, you're probably going to not like anything I've just said, but I really wanted to cover and really highlight the logic, the thinking, and the understanding behind the overall cycle. So, I hope this makes sense. So, anyway, enjoy your weekend, and we'll be doing another stream. I hope a little bit sooner if there's something else more interesting to say in the next couple of weeks. So, thanks for watching, guys.